The entire crypto world seems to be buzzing about a $50 price target for AIA Coin. Let's just put that in perspective. From where it is today, that would be a jaw-dropping return of over 500 times your investment. Is that even in the realm of possibility, or is it just market hype? Everyone sees the headlines, but very few people have actually looked at the data. Well, today, that's exactly what we're going to do. We'll explore the D-Agent AI ecosystem, its core technology, the tokenomics and the massive risks involved to see if there's a real data-driven path to this wild valuation, or if it's pure fantasy. So, what's the project at the heart of all this buzz? The coin is the native token for a project called D-Agent AI. This isn't just another crypto coin, it's a decentralized infrastructure platform for building, managing, and deploying autonomous AI agents. Think of it as the ground floor for AI programs that can operate on their own across different blockchains like SUI, BNB Smart Chain, and even the Bitcoin ecosystem. The main problem D-Agent AI is trying to solve is a huge one. For AI agents to be truly useful in Web3, they need a persistent identity, a way to remember things, and a way for their actions to be verified and trusted on-chain. Centralized AI, like the kind big tech companies create, lives in walled gardens, where developers are stuck with whatever rules and pricing the company decides. D-Agent AI wants to flip the script and create an open marketplace where AI agents can act as independent economic players. The native token, AIA, is what makes this whole ecosystem run. It's used to pay for agent services, to stake for network security, and to vote on the future of the protocol. Now, before we go any further, we have to clear something up. There is a completely separate project called AIA Chain that trades for fractions of a penny. That coin has a mind-boggling supply of over 13 billion tokens, and for it to hit $50, its market cap would be in the quadrillions. A number so ridiculous, it's not even worth talking about. The coin with all the hype, the one with the explosive chart, is D-Agent AI. Make sure you don't get them twisted. Alright, how could anyone even start to justify a $50 price for this? To get the bull case, you have to appreciate the powerful narrative, the potential utility, and the explosive tokenomics that fuel speculation in crypto. First, you have the AI narrative. The overlap between artificial intelligence and crypto is easily the hottest trend in the market, with some projecting it to become a multi-trillion-dollar industry. D-Agent AI is positioned right in the middle of it. It's not just building another AI model, it's providing the picks and shovels for a future where autonomous AI agents trade crypto, govern organizations, and manage data on the blockchain. This powerful story is what lit the fuse on its previous parabolic run. Second, the bull case depends entirely on adoption and growth. For AIA Coin to have real, sustainable value, people have to actually use the D-Agent AI platform. Bulls are betting that the team can deliver on its roadmap, which includes tools like Core AI and TrueSights, and expand its partnerships with companies like Soraya and BytePlus's Volcano engine. If that happens, you'd see more developers building agents, more users paying fees in AIA, and a flywheel effect where network activity drives up demand for the token. If D-Agent AI becomes a critical piece of infrastructure for the AI revolution, then demand for its token could, in theory, grow exponentially. Finally, let's look at the tokenomics from a bullish angle. The AIA token has a fixed maximum supply of 1 billion tokens. At a $50 price, that would give it a fully diluted valuation of $50 billion. That's a massive number, but bulls would argue that if D-Agent AI captures just a tiny slice of the trillion-dollar AI market, that valuation isn't impossible in the very, very long term. Some project documents have even mentioned the possibility of using protocol revenue for ecosystem incentives, which could potentially include buybacks to reduce the circulating supply and reward holders. If demand from a thriving ecosystem outpaces the available supply, basic economics says the price has to go up. Now, for a heavy dose of reality. Credibility means looking at the data, not just the dream. And when you check the numbers, the road to $50 looks nearly impossible to travel. First off, the math is just brutal. A $50 price isn't just a long shot, it's statistically improbable in any realistic time frame. With a max supply of 1 billion tokens, a $50 price means a $50 billion fully diluted market cap. To put that into perspective, a $50 billion valuation would make D-Agent AI a top 10 cryptocurrency. bigger than established giants like Solana or XRP are today. It would require a historic wave of global adoption on a scale few projects have ever achieved. Even bullish price predictions for 2026 generally top out around $0.14 to $0.24, with more conservative models hovering around $0.8 to $0.12. The $50 target isn't just in a different ballpark, it's in a different galaxy. The second, and maybe most critical risk, is tokenomics. For any new crypto project, one of the biggest threats is future token unlocks. Large portions of the AIA supply are allocated to the team, investors, and the ecosystem, and these tokens are released over time based on a vesting schedule. While this is standard practice, it creates a looming threat of sell pressure. As millions of new tokens become available to be sold on the open market, demand has to grow incredibly fast just to keep the price from falling. The biggest question for AIA isn't whether it can reach $50, but whether it can absorb its own token supply. Finally, you have competition and market conditions. Agent AI isn't the only player in this game. It's up against other decentralized AI projects and, of course, the colossal resources of big tech. There's also massive execution risk. Delivering on an ambitious roadmap in the world of crypto is never a guarantee. Plus, the entire crypto market moves in vicious cycles. The AI narrative is hot now, but trends fade. A market-wide downturn could drag everything down with it, and the token's extreme daily price swings suggest it's driven more by speculation than by stable, fundamental demand right now. So, where does that leave us? When you weigh the hype, the tech, the bull case, and the crushing bear case, a pretty clear picture emerges. The $50 price target for AIA Coin is a marketing number. It's a fantasy designed to generate clicks and excitement, but it completely falls apart under the slightest bit of mathematical scrutiny. A $50 billion valuation would require a level of success and market dominance that is almost unprecedented in the history of crypto. The bull case is a long-shot parlay. It needs the AI narrative to keep accelerating, the team to execute flawlessly on its roadmap, and the platform to achieve global adoption fast enough to soak up all the new tokens hitting the market. While the technology is interesting and tackles a real problem, the odds of everything going perfectly are incredibly low. The bear case, however, is grounded in hard numbers. The market cap math makes a $50 valuation look absurd. The upcoming token unlocks present a clear and present danger to the price, a ticking clock of potential sell pressure. The insane volatility is a major red flag, showing this as a high-risk, speculative asset, not a stable investment. More realistic predictions see the token's future value far, far lower, while a speculative mania in a bull market could maybe push the price into the $1 to $5 range in a best-case scenario. Many projections see the price struggling to stay above the $0.10 to $0.12 range long-term, especially once major token unlocks begin. So, while Agent AI is tapping into a powerful narrative with an innovative vision, the $50 price target is pure fantasy. The valuation is too extreme, and the risks from tokenomics are too severe. The project has an interesting story and has secured audits for its smart contracts, but it faces major hurdles like driving real adoption and navigating a market driven by volatility. The real story to watch here isn't the chase for $50. It's the battle for survival. Can Agent AI build enough real-world utility and demand to withstand the flood of new tokens? That's the question that will decide its fate. For now, it's best to treat the $50 target as noise and focus on the data. But that's just my take. What do you think? Did I miss any key factors or risks? Let me know your realistic price target for AIA Coin in the comments below. And if you enjoyed this no-hype, data-driven analysis, make sure you subscribe to the channel and hit that notification bell. Thanks for watching.